Hello. Well, there's still lots of news to dominate the headlines in the global markets these days. On the one hand, we've got slow economies in Europe and China. On the other, we're seeing some very strong runs in the Hong Kong market. What are we to make of it? Let's talk to trainer and trader Daniel Loh. Thanks for coming in today for Singapore Investment Week. So what should we make of all these conflicting signals that we're getting? That on the one hand, some economies are still struggling. US seems to be recovering. Other markets are just going and running away.
Yeah, it's a very different situation now. US is currently in a major bull run. The economy is getting better. But the thing is, all the other major economies are not faring very well. In fact, China is not well. Japan as well as Europe. They are still in a situation whereby they are printing money. They are still lowering down their interest rate, whereas US is now discussing about rising interest rate. That's why I do think that the bull market will still carry on. Okay, most likely for the next 2 years, is because there's a major liquidity issue that's ongoing. Okay, they're still having QE.
That's the irony, that this quantitative easing, this QE, means so much more money is coming into the economy. It's got to find a home somewhere, and often it finds its way into the stock market. What are the implications of that for Singapore investors?
Okay, I do think that if there's any correction in the next few months, which I foresee, because China is every day is running like crazy. So I do think that there might be a bit of correction, but in each and every correction, I do think there's opportunity. So I do think that this bull run will still survive, it will still carry on. So I think it's a good time for us to do a bit of homework. If there's any downturn, we do think that it's a good chance to enter the market. Yeah.
But still, bull runs also have different characteristics, aren't there? On the one hand, there's the bull run that usually starts just like 2003, starts just as things looked gloomiest. Do you remember those days?
Yes.
We had SARS, we had the war in Iraq. I mean, in those days, nobody was thinking of a bull run, yet that's when it started. But then further along, as we got closer to 2007, there was a bit of an exhaustion of the bull run. So here we are now in 2015. Where are we at? Are we at the beginning or at the middle or the end of this bull run?
Yes. The thing is, I do classify bull run as 3 phases. Let me explain. Okay. In fact, let's look at, for example, Japanese Nikkei index. In 2013, it started its bull run. Then it keeps on running up from 8,000 points to 16,000 points.
And we can see that on the chart, just as you're talking. You've circled that there in that first box.
Yeah.
So what drove that first phase of the bull run?
Correct. Normally, the first phase of bull run start with the government trying to inject a lot of funds, inject a lot of confidence into the market. They may print money, they may lower down the interest rate, which is what exactly in 2013 the Japanese government is trying to do. And now currently, of course, from 2014, Shanghai Composite has gone into a bull run. They also started with the first phase of bull run. From the stock market, you can see that it went from 2,000 points to now currently 4,300 in a short few months. Why is it so? Because of the liquidity that's pumped in, the money that's printed, the lowering of the interest rate. So I do think that one sure formula of a bear market going into a bull market is when there's liquidity and the interest rate remains low. And that's what Shanghai Composite is doing now. But having said that, I do foresee that Shanghai Composite within the next few months is going to go into what we call the second phase of bull market.
And here we've got the chart again from Tokyo, where this happened a few years ago. Again, talk us through that rectangular box there in the middle of the chart.
Correct. Let me explain the first phase of bull run. Normally what happened is that there's no fundamental needed to push up a stock price. Normally, analysts don't study the fundamentals. The thing is, it's all because of speculation. But during the second phase of bull run, and normally it starts after 1 year since the first phase start. Okay, normally the second phase starts 1 year after. And that is when analysts will so-called scrutinize each of the earnings report, see how the company is doing. If it's not doing well, it's going to push down the stock. And the thing is, they also scrutinize how the economic report situation is. If it's bad, that's when the second phase of bull market will start. And that's when the consolidation might be long. And I foresee that most likely for Shanghai Composite, within the next few months, we shall see that it enter into what we call second phase of bull run.
And looking at the Tokyo, the Nikkei 225 chart, I mean, that seems to indicate that this second phase is actually quite long.
Yes.
Isn't it? And in this case, it was almost 2 years.
2 years. The thing is, we have did a lot of surveys and also a lot of analysis in past history, historical bull run. And we found out that second phase of bull run normally will last between 9 months to around 2 years period. And this is the period whereby the companies need to show good earnings to maintain their stock run.
Okay, and then again, we're looking at your Nikkei 225 chart here because obviously Shanghai isn't there yet in that second phase.
Correct.
But what then happens to get from that second phase into, I suppose, that third phase that we are now in on the Nikkei 225?
Correct. There are two things that need to happen. The companies need to show consistent growth in their earnings. That's when they get out of the so-called the economic turmoil. And number two, the economic reports need to show better so-called results compared to what the market thinks. And that's when normally a stock market goes into what we call the third phase of bull market. In the third phase of bull market, we are discussing about the rise of interest rate. We are discussing about the inflation that's going to kick in. And it will lead to what we call hyperinflation. So the bull market always go from one cycle, one phase to another.
It's a little bit like relationships, isn't it? First you
Yes.
fall in love, then there's that period where you question everything, and after that you kind of reach a maturing stage when you kind of move ahead.
Correct, Mark. The thing is, sometimes it amazes me that within a 6 years bull market, a lot of investors cannot make money. And the thing is, we have done a lot of research on it. We found that it's because they don't understand there are different phases in the bull market whereby they need to employ different techniques, different strategies to invest in the right kind of stocks. As an example, in the second phase of bull market, normally we cannot so-called pay attention to the aggressive sectors. We need to pay attention to the defensive sectors. And that's when the REITs, for example, the telecommunications or the utility industry, normally they will start to run. And if you can recollect, gold reached a high point at around 2011. And that's where US is in the second phase of bull market. So that's when a lot of people might channel a lot of funds, a lot of hedge fund managers might channel a lot of funds into the defensive sectors.
Yes. By the way, do you also know when the third phase is over and we head into a bear market?
Yeah, that's when normally when hyperinflation kicks in, the market is already hyped up, and that's when interest rate rise to a certain point. The thing is, if interest rate is still low, I don't foresee there's a liquidity crunch. But once interest rate rise to a certain point, and that's when the bubble will burst. Yeah, that always happens.
And of course, we're nowhere near that because interest rates haven't really started rising just
Yes,
yet. But
correct.
how's the Singapore market doing? So we've talked about the Nikkei 225 and the Shanghai Composite. What
Okay.
about our local market?
Yeah, there's good and bad. The thing is, Singapore is now in the third phase of bull market already. Yeah, but the thing is, I do foresee that this bull market will still carry on for at least 1 to 2 years. It will depend on how fast the interest rate rise. If the interest rate doesn't rise very fast, slowly accumulating, I don't foresee that there's a bear market coming. So I do think that next year I look forward to Singapore about to reach the all-time high figure, which is 3,900 points.
All right, we will hold you to it, Daniel, and get you to come back for next year's Singapore
Thank you.
Investment Week.
Yeah.
Look at the website that's on your screen now for more information when you can hear from Daniel Loh and others like him. See you during Singapore Investment Week.